good morning, good afternoon, good evening, all those things, whatever time it is, wherever you are. And I hope you're doing well on this Sunday, the 5th of October, 2025. And Bitcoin is a new all time high. About an hour ago, it hit an all time high of 125,690. And it's currently still at 125, 143, something like that. So, yeah, so Bitcoin in the 125K range, not a surprise if you've watched my recent videos about Bitcoin and the possibility that it could hit. Yesterday I made videos that said we could be hitting it within hours or days, possibly, if it doesn't drop down first. I said it certainly could drop. There are probabilities to the downside, but it's certainly possible that it could go up, and here we are. So it's essentially in blue sky territory now. I mean, yes, it's now technically $500 or so, $550 below the all time high of an hour ago, but it's currently in the all time high territory. And so the question is, what will it do next? Well, if you look at Bitcoin on the daily, yeah, a lot of information here. I'll try to show you the chart real quick. If you look at Bitcoin on the daily, you'll see that a lot of information is pointing to the upside. Right? Volatility, generally, entropy, generally, AVQs pointing the upside, returns oscillator is a bit mixed there because you got some positive correlation on contracting or already negative but flat returns. But the COV also looks to the upside. The asset is well above the power main band, which certainly is fairly tight and beginning to expand to the upside as the asset continues to rise. I mean, it certainly looks good for the upside for now. Okay, on the daily. You want to break it down a little bit further? Sure, why not? 4 hour. Also above the power main ribbon, having a fat tail outlier to the upside on variance. Returns oscillator positive. ADQ is all looking up. DLP's up. Fish up. Yeah, volatility looking up. Entropy trending to the upside. Asset having a nice move. RMLRs are intersecting, but they're not intersecting with the power mean at the moment. That's fine. I mean, there's plenty of room for it to run. Let's do just do a quick look here at the 15 minute. You can see here that the CDR right here, central daily range is very tight, around 0.14% of the asset's value, so probably a trending day. And so far, we've seen nice trending moves, or a nice trending move right here on the day so far, right here. You can see that is a very nice trending move on entropy. You can see also the asset is in mean reversion on the 15 minute. To where? To the 15 minute 3012 RMLR right there, right? Which certainly could go up, down, or sideways, right? Right now, that 15-minute RMLR is around 125,687. And, kind of going sideways and up for the time being. And also on the 15-minute, it is also above the power mean ribbon, not too far. Certainly could come back down and test the power mean ribbon at some point in the game during the mean reversion, whichever direction it goes. Right now, there's no div on RO. It's just playing out. The bear div that began a few candles back, right after the all-time high, is just playing out. And COV is dropping on contracting positive correlation. So, yeah, I mean, we'll see how this plays out. But nothing super surprising happening here, which it just means that the VEPS is playing out as usual, which is what we expect from the VEPS to do, right? The vast majority of the time, they do what the probabilities indicate. That's the beauty of these calculators. They're very reliable. If you know what you're doing, because they're so accurate, they're very reliable. So, was the grand prognostication that we might hit an all-time high, possibly in the coming hours or days, accurate? Well, yes. Did I tell you a week ago we're definitely going to hit an all-time high next Sunday? No, because that would be foolish and that would be wrong-headed. Because it's quite um, improbable to tell you exactly when it's going to hit the next ATH or whatever, because there's randomness in the market, right? But was I a gloomy, doomy bear yesterday? No, not at all. I was telling you that it'd be great, that it's great for investors and even for traders when prices go down, because then you get to buy more for the same amount. But I was certainly saying there is a very decent probability that we will see new ATHs in the next hours or days. And by the way, also, what else did I say? That people usually um, assume that when we hit new all-time highs, or we're going to the moon, baby. But actually, what happens very often is people sell off. You hope the bull run pops. Okay, that's a very good point, Nick. I uh, I don't believe that there is such a thing as a bull run or a bear market. Those are just common popular phrases, and maybe you mean that too. To me, but maybe you don't. But to me, a bull run, or a bull market, or whatever you want to call it, is just a period, an extended period of buy pressure. That's all it is. Just like a bear market is just an extended period of sell pressure. And I know that saying it that way sounds less exciting and more boring, maybe, than just calling it a bull run or a bear market, which is easier to kind of comprehend for the layperson. But really, what is a bull market? It is just an extended period of buy pressure. And most people just don't get that. They don't understand that necessarily. You'd think they would because it's not exactly a complicated thing. But a lot of people think it means things other than what it actually means. So I like to be clear about that. But yeah, yeah, if you zoom out. Yeah, I mean, really, what is a bull market? It's when prices go up. That's how people perceive it, right? Well, what does that mean? That means extended periods of buy pressure. So there's more buyers than sellers, right? In other words, there's more orders buying, raising, and thus raising the prices than there are orders selling and thus lowering the prices, right? And and remember, it's really the prices that are following the returns anyway, and the returns are doing what the volatility indicates. Right? The volatility is the standard deviation of returns, and that creates the returns themselves. Right? The standard deviation of returns creates the returns. How can that be? Well, because the standard deviation of returns is the spread between the ask and the bid from the mean of returns. That delta between the ask and the bid between of the mean of returns, that variance is another word for volatility, which is the standard deviation of returns of investments. And that creates the actual return on investments that follow. And the actual return of investments that follow, together with their correlation, they end up creating the direction of the returns of the price action and the returns, right? So if the returns are increasing and the correlation is going negative, the price action will usually fall to the downside. If the returns are decreasing and the correlation is negative, price action will usually go to the upside. If they're both headed up, returns and correlation, price action usually goes to the upside, etc. Just like you do with volatility. Right? In our cheat sheet, if you don't know the alpha trading cheat sheet of the 6 tendencies of volatility, it also works with entropy, also works with returns and variance. But yeah, the 6 tendencies of volatility. Um, we'll show you that. So the volatility creates the returns, which creates in turn the price action that follows it. And that's all price action does, really, right? Price action follows the return. If price action does anything, it follows the return. Most of the time, price action, by the way, is on a random walk. And what does that mean? That means that there's geometric Brownian motion at play. And it doesn't matter what the time frame is, right? Any time frame, it'll be on a random walk around 70%, 80%, 90% of the time, depending on the asset. Hello, Osher. Osher to you too. Osher Osher. Um, yeah, and some of the time when it's not in a random walk, what's it doing? When it's not in a random walk, an asset is in a trending move, as I just showed you Bitcoin on the 15-minute, for example. So for now, it looks good to the upside, but remember, it is in mean reversion on the 15-minute, right? To the 123 and a half or so level. Now, is that a big dip if it drops $1,000? No. Or $2,000? No, it's not a big dip. From 125,000, $2,000 is not a big dip, right? I mean, that's actually a fairly small amount to go. Like it's a 1% move. It does 1% moves all the time. You know, over the course of a day, it'll go up and down 1% any number of times. So the question is, what will Bitcoin do relative to the all-time high that we're at? Will it continue to run now, or will it pull back and start the new week in the downward direction? And the fact is, that's why we look at lower time frames, right? On the day, and we don't worry about, because the weekly time frame looks great for the upside. Fantastic. You know, Bitcoin's gone up more than 11 points this week. Absolutely wonderful, right? And that week ends in another 18 hours. It's gone up over 11 points. Does that mean it has to pull back necessarily? No, actually. If you look at the weekly information, you'll see that while the volatility is increasing across the board and the correlation is falling, and entropy is indicating to the upside as well, even though it's on a random walk basically, and you got that contracting positive correlation, and entropy is contracting, so yeah, it's going up. AVQs are also both rising. DLP is heading up. It's at the first confidence interval. There is actually bull div on the entropy oscillator, which is playing out, and COV is rising with positive correlation that's increasing, but there's no fat tail there yet, and it is above the power mean ribbon, but not massively. In fact, it's just barely above it, right? Like maybe by a couple points or whatever, maybe by 4 or 5 points, whatever. It's not, you know, the body of this candle is both beneath the top of the power mean ribbon and the top, you know, and above it. It's only above it by 6.5%, which seems like a lot, but it's not that much. It certainly has plenty of room to run if you look at the weekly ribbon. Because again, it's gone up 11.5%, so about half of the candle is inside the power mean ribbon, and there is certainly room to run to the upside. Now, does that mean it has to run to the upside? No, it doesn't mean it has to run to the upside. That's a weekly time frame. This is a very high time frame. And yes, it still has 18 hours left on this particular candle. I'm saying on the next weekly time frame. It still looks good to the upside for now. The question is, will it play out? And the lower time frames will be your friend, right? So tomorrow, on the new week, in about 18, we'll see new information on this weekly, which for now continue to look good to the upside. So a lot of what will happen on the new weekly will depend on what plays out the rest of today. As it finishes this time frame, will it end up getting a bit softer by the end of the day and start looking a little bit more to the downside? Or will it continue and finish the day strong, heading further towards the upside, thus creating a stronger weekly candle for the next week? Either way, it'll probably be pretty close unless it has a massive dump today, right? And that, it could always happen. That's why we say look at the lower time frames. But for now, it looks pretty good to the upside for today. So big targets, like everybody wants to know, what are the big targets? Are we going to 150K? Here's my answer. The big targets are moot. The big targets are not what you shoot for, like holding it at 125, hoping it's going to go to 150 or 200. If you're doing that, just put it in your wallet and forget about it. Just Don't try to trade from 125 to 150 in a single trade. I'm not saying it can't happen. I'm just saying, why would you hold the trade that long? You're losing massive opportunities to the upside and the downside. You're losing a lot of opportunities. That doesn't mean that that you need to be in every trade. Far from it. Hello there. Hi there. Random. Hello there, Ori, whatever. Ori much. Hello. My day. My day is so far sunny with blue skies. And I am just looking at the probability that the asset will continue rising or go sideways or come down a bit in order to complete the mean reversion to the 15-minute. And for curiosity, I'm looking at the, possible targets, the probable targets where it might go to the upside or the downside or sideways, right? Yes, on the 15-minute time frame, but also I'm looking um, for you curiosity seekers. I'm looking also at the higher time frames just to see where it might likely go, right? So if you look, for example, at the weekly time frame, has some pretty interesting targets that it certainly could go to even on the next week, right? For example, it is absolutely conceivable that it could go above 136, 137, 138, maybe even 140, maybe even 150 in the coming weeks. Okay. It's absolutely conceivable. It certainly has that ability. And again, I remind you that on this weekly candle, there is very much an intersect or very close to an intersect happening of the 30 power mean smoothing like 10 and the 30-12 RMLR, which means that there's a very high probability of a nice move relative to the time frame within 0 to 4 candles. Now, technically, they're not intersecting, but it's very close. And we are having a very nice week. Like I said, again, up 11.5% on the week so far. Could it have more nice moves over the next 0 to 4 candles? Because we are still technically in the 0 candle. Yeah, it could. It could have crazy moves. There is a high probability, and we've already had a nice move on the 0 candle. By the way, there's likely to be a proper intersect in about 4 weeks' time in late October, and one shortly after that, like the next week, beginning of November. So it is entirely probable that we will see this month do some wild things. It is also, there's a high probability because we've reached an all-time high that people will sell at the all-time high, and will bring the prices down not unnoticeably for a lot of traders who will probably be over leveraged in their long positions, and as soon as the price moves even a couple points down, they'll get wrecked because they've got 50x positions or whatever. And we always see it like the all-time highs now. So this is exactly where people are going to start loading up on buys. You can buy near all-time highs if you see it dip a little and give you a reposition to go back up. You got to be real careful because all-time highs, that's where you very often see a dip, right? And then, by definition, when there's actually some kind of record all-time high is when you see a dip. Now, 125K is technically an all-time high, but it's not like some massive smashing record. Right? It went up about $1,000 higher than the previous all-time high. So it's not exactly a lot, like a percent, not even. And so what does that mean? Well, yeah, we could go up to 150. There are targets up there. There are targets around between here and 150. There are plenty of targets, different time frames, etc. But if you look at like the weekly probability bands, RMLR bands, like the outer bands of the RMLRs, if you look at daily bands of the RMLRs and the daily probability bands. If it went to a fat tail outlier today, a third standard deviation fat tail outlier on the plots or normal, it'd be going up to around 130K today if it did that. And then it would, by the way, hit both of the outer bands of the RMLRs of the 1110 and the 3012, in which case you'd be looking for a mean reversion on the daily right now. Right now, you're not. Right now, it still has room to run. Right? It might hit that outer band on the 1110 RMLR tomorrow, depending on how the asset moves. Hello, everybody. But so far, it has not hit those outer bands on the daily, and it still has room to run to the upside. Right, so just bear that in mind. There is still plenty of juice in the tank for this asset to go if it wants to. They call it the honey badger for a reason, because it does crazy things. But again, that's why we trade low time frames, right? The high time frames are meaningless for your trades. Like, it does not matter what the information says on the weekly or the monthly time frame, or even frankly on the 3-day time frame, right? To your intraday trade. The day, yes, it matters in the sense of you got to understand the big picture to know your workflow, to know generally where things are moving. I've generally told you things are looking very nice to the upside. Even if they go down a bit, they're still looking generally very nice to the upside. We're at record highs, right? But it's on the low time frames where you actually make the trades, and hopefully you don't get to a point where your trade is just in a higher time frame. You want to stay in a lower time frame with your trades. You want to keep them in lower time frames, because then you get more occurrences of opportunity throughout the day. That's why. The longer you sit in a trade, the more you lose an occurrence of opportunity. Like, especially if you're sitting in a losing trade. Huh? If you're in a losing trade, you got to just get out. It's just rip the Band-Aid off. It's better to lose $1. I'm telling you, it's better to lose $1 than to lose 10 or 20 or 1,000 or whatever. Just rip the dollar. Just lose $1 and win the next 10 trades. And even if you win only 50 cents on average or 33 cents on average on the next, out of 10 trades, you win 9, you lose 1. Okay, you win 33 cents each time you can trade. That's more than $2.70. You're getting close to $3, right? And you lose 1 trade, and you lose $1. Okay, so you still made it $1.33 on your 9 trades. Okay, and that's if you lose up to $1. And don't lose $1. I'm just using $1 as an expression to represent 1%. Okay, you lose 1%, up to 1%, hopefully less, on 1 trade, and you win on average 0.3% on your next 9 trades. Do that consistently, you'll be a consistently profitable trader. It's that simple. It's really that simple. Like, don't even let yourself lose 1%. But if you do 1%, that's it, max out. Like, just get out as quickly as you can, around 1%. Okay, if it goes to 1.05%, whatever, just get out of the trade. Just get out of the trade, whatever it's going to. If it shoots past 1%, just get the hell out of the trade. Okay. And that's why you got to be careful with leverage, especially if you're trading volatile assets like crypto, because it can go from 0 to 1% extremely quickly, especially if you're leveraged. My God, right? If you're using 5x leverage, you can reach 1% in a matter of like a moment, right? I mean, easily on the Bitcoin in a 15-minute candle, it can go 0.2%, which at 5x is more than 1%, easily, right? That happens all the time. We've seen it happen here just in the last hour a number of times. So if you're wrong by 1%, just get out. And by the way, there's plenty of assets that move faster than that, up and down, right? Like meme coins or whatever. They will easily move 0.2% in a 30-second candle. Like on a boring 30-second candle, right? So It is not a problem um, to get into 1% position. It's very easy to be down 1%, and you shouldn't be down 1%. If you are down 1%, you should get out of the trade. It doesn't matter. It doesn't matter. Just get out. Even if your trade is gonna be right, even if it will go back in that direction, the moment after you close your trade, it's better to lose the trade and learn the lesson, and manage the next 9 trades so that you have wins of at least 1/3 of that at 0.33%. Over 9 trades, you will still beat your losses in those 10 trades, and hopefully you can have a 0.5% move or a percent move. If you're in those next 10 moves. So that's how you make sure you don't lose your stack. Anyway, folks, that's going to do it for now. Well, yeah, that's going to do it. Take care. Peace.